All right, folks, let's talk about cash flow statements. Sounds thrilling, right? Like a Netflix documentary about spreadsheets, but hold on. Before you click away, let me tell you this. Understanding cash flow is like having a superpower in the business world. It's like having X-ray vision, but instead of seeing through clothes, creepy, you see through a company's finances. And trust me, that's way more useful. So why should you care about these magical statements? Well, they tell you the cold, hard truth about a company's cash. Where it's coming from, where it's going, and most importantly, if there's enough of it to keep the lights on. This is crucial for investors, lenders, and even employees who want to know if their paychecks are safe. Now let's break down the anatomy of a cash flow statement. This financial document is crucial for understanding the movement of cash within a business. It provides a detailed summary of how cash is generated and used over a specific period. It's divided into three main sections: operating activities, investing activities, and financing activities. Each section offers unique insights into different aspects of the business's financial health. First up, we have operating activities. This section is the bread and butter of a business, showing the cash flow from its core operations. It includes all the primary revenue-generating activities of the company. This is where you'll find details about cash received from sales of goods and services, as well as cash paid for expenses like salaries, rent, and utilities. Essentially, it reflects the day-to-day transactions that keep the business running. Think sales, expenses, that sort of thing. For instance, if a company sells a product, the cash received from that sale is recorded here. Similarly, if the company pays for raw materials, that expense is also noted in this section. Next, we have investing activities. This section tracks the cash flow related to long-term investments like buying or selling property or equipment. Think big purchases. It's all about the investments that will benefit the company in the long run. For example, if a company buys a new piece of machinery, the cash spent on that purchase is recorded here. Conversely, if the company sells an old piece of equipment, the cash received from that sale is also noted in this section. And last but not least, we have financing activities. This covers how a company raises capital and repays its debts. It's all about the financial strategies a company uses to fund its operations and growth. Think loans, equity, and dividends. For instance, if a company takes out a loan, the cash received from that loan is recorded here. Similarly, if the company issues new shares of stock, the cash received from investors is also noted in this section. On the flip side, if the company repays a loan or pays out dividends to shareholders, those cash outflows are also recorded in this section. It's a comprehensive look at how the company manages its financial obligations and growth strategies. It's all about the Benjamins, baby. Understanding these three sections of the cash flow statement can provide valuable insights into a company's financial health and operational efficiency. So next time you look at a cash flow statement, you'll know exactly what to look for. Now, there are two main ways to prepare the operating activities section of a cash flow statement: the direct method and the indirect method. The direct method is like following a recipe step by step, listing every single cash inflow and outflow. It's accurate, but can be a bit tedious. The indirect method, on the other hand, is like using a shortcut recipe. It starts with net income and adjusts for non-cash items. It's quicker, but might not be as detailed. Section 5, reading between the lines, understanding the statement. Okay, so you've got your cash flow statement. Now what? Don't panic. It's time to put on your detective hat and start analyzing. Look for trends, red flags, and anything that makes you go, Is the company generating enough cash from its operations? Are they investing in growth? Are they drowning in debt? The answers to these questions can reveal a lot about a company's financial health. Section 6, the lemonade stand, a refreshing example. Let's say you're a kid running a lemonade stand. Imagine it's a sunny Saturday afternoon and you've set up your stand at the end of your driveway. You've got a big sign that says fresh lemonade, 50 cents a cup, and you're ready to make some sales. Adorable, right? Your cash flow statement would track the cash you made from selling lemonade, which falls under operating activities. Every time a neighbor buys a cup, you jot down the sale in your little notebook. By the end of the day, you count all the money you've made. This is your revenue, and it's a crucial part of your cash flow. It would also show the cash you spent on lemons and sugar, which are also operating activities. Remember, you had to go to the grocery store with your parents to buy the lemons, sugar, and maybe even some cups. You keep the receipts and note down how much you spent. This is your expense, and it's just as important to track as your revenue. And any money you invested in a fancy new lemonade stand would be considered investing activities. Perhaps you decided to upgrade your stand with a new tablecloth, a better sign, or even a small umbrella to keep the sun off your customers. The money you spend on these improvements is an investment in your business, and it's recorded separately from your day-to-day operating expenses. Lastly, if you borrowed money from your parents to start your business, that would fall under financing activities. Maybe your parents gave you a small loan to get started, or perhaps they invested in your stand in exchange for a share of the profits. This money is different from your revenue and expenses because it's not earned from sales or spent on supplies. It's financing, and it helps you get your business off the ground. See? Simple. By understanding these different types of activities, you can get a clear picture of how money flows in and out of your lemonade stand business. Section 7. Cash flow, wisdom, tips, and tricks. Here are a few more nuggets of wisdom to help you master the art of cash flow analysis. Understanding cash flow is crucial for any business, whether you're a startup or an established company. It's the lifeblood that keeps your operations running smoothly and ensures you can meet your financial obligations. Let's dive into some essential tips that can make a significant difference in your cash flow management. First, cash is king or queen. Positive cash flow is essential for survival, even if a company looks profitable on paper. It's not just about having money in the bank, it's about having the right amount of cash at the right time. This means planning for both expected and unexpected expenses. Always keep a buffer to handle emergencies. Regularly review your cash flow statements to identify patterns and anticipate future needs. This proactive approach can help you avoid cash crunches and keep your business running smoothly. Second, don't be afraid to ask for help. There are plenty of resources available, from financial advisors to online tutorials. Financial advisors can provide personalized advice tailored to your specific situation, helping you make informed decisions. Online tutorials and courses can offer valuable insights and practical tips that you can implement immediately. Networking with other business owners and joining professional groups can also provide support and share experiences that can be incredibly beneficial. Remember, seeking help is a sign of strength, not weakness. And third, practice makes perfect. The more you analyze cash flow statements, the easier it gets. Start by setting aside regular time each week to review your financials. Use this time to identify trends, spot potential issues, and make adjustments as needed. Over time, you'll become more comfortable with the process and more adept at making strategic decisions. Additionally, consider using financial software to streamline the process and provide real-time insights. The key is consistency and a willingness to learn and adapt. With these tips, you'll be well on your way to mastering cash flow management. Section 8, the power of cash flow, real-life success stories. Need some inspiration? Many successful businesses have mastered the art of cash flow management. Take Amazon, for example. They focused on generating strong cash flow from their core business, which allowed them to reinvest and expand into new areas. Or look at Apple. They're notorious for their cash hoard, which gives them the flexibility to innovate and weather economic storms. Section 9. Conclusion: mastering your cash flow destiny. So there you have it, folks. Cash flow statements might not be the most exciting topic, but they're crucial for understanding the financial health of any business. By mastering the basics, you can make informed decisions, avoid financial pitfalls, and achieve your financial goals. Now go forth and conquer the world of finance, one cash flow statement at a time.